Hey guys, it's Max. How's everyone doing? Let's look at these Defiance funds. The market turned around. I wanted to do a really quick update. Everything looks a lot better than the morning update. It's just an hour or so later. 12:30 in Hill Country right now. Okay, so let's do this. All right, well, first things first, on the uncapped report, we want to see as much green on this report as possible. Green means that the call spread part of the investment is paying off for us and we're making bonus money. Okay, last week we had 2 of our call spreads go in the money where we made extra money that we would not have otherwise made had we not had the call spreads. All right, and that's the in the money amount there. And these other ones, that's the out of the money amount. Some of them, that doesn't always work out. This week, we've already got InFly on the good list. So they wrote the 705 and bought the 715, and right now the market is 719. So they're 66 bips above that. So great job. There's some other funds that are getting close to going over it as well. So we'll keep an eye on that. Let's look at the new buffer report, the single stock buffer report, see what's moving right now this hour. All right, AMZ pulling back a little bit. AMDY looking great. JPMO outperforming the parent, as is Coney, as is Aptly, as is GUI. MRNA, not so much, underperforming the parent a little bit. AI outperforming the parent on the downside, unfortunately. Look at old NVDY, it's making up for it, though, up 3.5%. That's awesome. True, the parent asset's up 4.3%, but hopefully you have some of that as well. Hopefully you have some of that in another account. That's the way to handle that problem. Use these as income funds. Keep these in an income account, very small part of your portfolio. Cash the big checks they send you every month. But also, of course, with 80 or 90% of your money, you have normal stocks. So in NVDA, the normal fund, not the high yield fund, NVDY, when NVDA is up, you're happy both ways. You're doing well both ways. All right, so Tesla, same thing with Tesla. Buy some Tesla. If you don't already have some, that make a great pair. All right, look at YieldMax outperforming the parent. YMAG getting a ton of upside. Meta outperforming on the downside. Oh well. MSFO down a little bit. OARC outperforming on the upside. There's InFly. InFly is not outperforming the parent asset, not yet. I expect they will if this trend continues. At least the market's not giving them credit for it, let's just say. But they are over they're in the bonus. They're in the bonus territory right now. So here's old GDXY. Now GDXY is totally capped, but you can't really tell it by looking. They're still catching plenty of upside. They're still catching as much upside as InFly. For whatever reason, InFly's not capped, GDXY is capped. So cap's not the be all and end all. It's also how far you set your strike prices away from the money. But the cap, but it all goes in the equation. All right, look at this. PayPal high yield fund, PayPay, PP, whatever it's called, PayPay is outperforming the parent asset, as is Dizzo. That is great. Snowy, not so much. Abney, not looking great. Look at Baba, though, or Babo. Babo's uncapped, getting a ton of upside, not as much as the parent asset, but a ton of upside. What else do we have to look at? Okay, we've already seen that. We've already seen call spreads. Round Hill dividends, already spoke about that this morning briefly, but right now the current estimate is 28 cents. That's the running estimate. My last guess was actually, I wrote this down wrong, was actually 35, and I missed it. It was 20, but it's my first time to guess. This time I'm guessing 28, so we'll see. Now let's look real quick at Defiance. For those Defiance fans here, Defiance is killing it today. Just absolutely killing it. So look at JEPY. They sold the 57.25 strike, and that's all the way out of the money. So they're making all the money they're going for, which is 25 bips. They're up 76 cents a share. Dividends $2.34 a share. 63%. I mean, what's not to like? Look at this massive turnaround in some of these stocks. Look at that. It went all the way under the profit box and then popped out of the other side. That's awesome. Look at SPX, max profit. Now let's look at Russell. I always say Russell's either the strongest or the weakest, but always the most volatile. Well, definitely the most volatile today, had a gigantic gap down. Well, actually not. It wasn't. It actually gapped up a little bit from where it closed. It's just way underneath the profit box. I don't understand why they put the profit box up there. So in any event, Russell's turned around. Looks like it's close to the highs for the day. It's outside the Bollinger Bands. We'll see if it can get a trend started. All right, so Russell, let's check out USO for those people that have USOY. This thing's looking great. Now let's check out some of the YieldMax funds. Why did I not know the symbol for Netflix? All right. Well, anyway, there it is. It is breaking out 721.58. All right. So, but that's somewhat concerning to me. Oh my gosh. Because $7.15, this says $7.19. Oh, $7.20. Okay, yeah, okay. It's right. It's just that the 7.19's delayed a little bit. Okay, perfect. So these guys are out of the Bollinger Bands for the fourth time period. They're killing it. They're in trending mode and they are trending. So that is great. All right, so let's see what else is really moving today. NVIDIA is the main one. Let's look at NVIDIA. Now we can see how far we need to get these call spreads activated. So let's go back here. NVDY, they had the 121s and 120 sold, but they bought the 124s and 123s. So we'll make kind of a composite profit box here with kind of both trades in there. Something like that. That'd be a nice composite profit box. So you can see we're well on the path to making this one pay off, to having this one pay off for us, right? So that looks really good. Let's see what else is moving. Oil is moving. We don't have to look at that. GameStop's moving. I love doing GameStop options. Maybe I'll make some content on one later. Because it looks like it's in play again. Maybe we need to buy GameStop and then heavily hedge it. We'll see. All right, so AMD looking great. You can see when they get outside of the Bollinger Bands, they tend to trend. That's why they're outside the Bollinger Bands. The market is pushing away from where it has been. When they fail and pull back inside the Bollinger Bands, and that's the market mean reverting. So it goes back and forth between the two states generally. So anyway, we'll keep an eye on that. So that's AMD. USO's up. We talked about that. AMDY's up, of course, because AMD is. Look at old Mister here. Look at that. All right, we have the profit box drawn for this one, or that may be last week's profit box. But let's just check real quick. Misty. So they sold the 150, or they sold the 150, 155, and they bought the 160. No, that's this week's. Anyway, you can see they're right in the target zone. You guys realize, don't you, when they go over the top line, which is what you're aiming for, that's what you want. It's a max loss on the spread. Your call spread, the call spread that Jay put on there, it's at a max loss. This strategy is called an overlay strategy. The reason it's an overlay is because this is not the main part of your strategy. The main thing that drives the returns is the SPY. In the strategies like for like SPY T or whatever, or JEPY, the main thing that drives the strategy is For instance, in SPY T's case, they 99% of the fund, they own the SPY. With 1% of the fund, they do a call spread overlay. You want the call spread overlay to be at max loss every day, believe it or not, because when it's at max loss, when the call spread's a max loss, that means the SPY is going up, and that's really what you're betting on. The call spread is a side bet to bring in a little income. All right, so let's see what else we have. Tesla's up. Do you guys remember when I was on Mike, the Tactical Stock Scalper show back in probably January or February, maybe March? He asked me my stock pick, and I said Tesla. And I have no idea. The reason I said it is because it was, out of all the big stocks that we follow and stuff, it was the one down the most. So I was just hoping, because it had a terrible, year last year. I was just hoping that it would mean revert. And you can see that it's, but I had no special insight. But I said that back. Where did I say that at? I'm sure a lot of you guys saw Tesla going up sometime in the future also. I said it back here. Anyway, all right. So now let's look at option strat really quick. I have a few of these trades simulated in here. I thought you guys might be interested in looking at this. You can see the AMD trade's making $1.3 million right now. The Babo trade's making $358. Babo. YieldMax is the AI. The AI cover calls are making $150. Let's kind of see how one of these works. Let's look at AMD. It's a pretty interesting one. Oh, look at that. All right, so this is the profit and loss graph at expiration. Okay. This is the profit and loss graph right now. That profit and loss graph basically looks the same as a stock profit and loss graph. It's just owning stock. Jay's got the system hacked where you get stock returns plus you get a little 20% bonus money from the call spread. That's what he's doing in essence. So you're getting returns. You have the same risk as stock. So that's why Jay always says, if you aren't comfortable, and Sylvia, if you aren't comfortable with stock risk, don't buy these funds because they have stock risk all day long. Tons of stock risk. Look at that. $14 million worth of stock risk in this trade right there if it dropped that far. But when it's all said and done, the way it works out, they make a little money even if they go nowhere, even if they go down. And that's where the income part of it comes in. But where the stock part of it comes in, if they happen to go up, they make just pretty damn close to the same amount of money they would have made on just stock. So how can we look at that? Well, let's do this. Let's exclude that, and let's exclude that. All right. The white line is how much the call spread strategy makes or loses. And the green and red line is how much just buying stock, the old-fashioned way, the way people used to do it. So whenever it goes down, the covered call strategy is always better. Whenever it goes sideways, the covered call strategy is always better. Whenever it goes up, but less than 1% in this case. Well, okay, whenever it goes up, but less than 0.9%, the covered call strategy is still superior. However, when it goes up more than 1%, or I'm sorry, when it goes up, as it goes up more than 1%, yes, the stock strategy is better at that point. You would have been better off just having stock because that's where your give up comes in. The thing is, it's not that much of a give up because if you can get up just a little bit more, you could start going up just like the stock can, just right next to it. See the white lines, how much you make on the call spread. So that's the uncapped upside. So that's what we're going for right there. Anyway, hopefully that was a good way of explaining it. So let's see what else we have in the book here. We have, let's look at Meta. Meta's one that's not working out. Let's see what we need. Okay, with Meta, the price just needs to cooperate. The price moved down, and it moved down far enough that it's right on the borderline of break even or not. Now, that's an expiration. Now, right now, like I always say, It's basically like we're trading stock, and we're underwater a little bit right now just because the price is down. If we were up, we'd be up a little bit, just like stock, until expiration. And then when you realize the full premium from this option, you're selling this option for $7.03. That's your profit center. This option you're buying behind it for $2.30 is an expense. So you're only realizing whatever the difference is between those. But this is this right here is what you can retire on. This is how they pay the dividend. And right here, you could see you could see about what these types of options pay. If you sold these types of options, you would make about 32% a year yield. So that's the IV. All right. So, I think that's probably all we have to look at. Looks like everything's going well, but I just wanted to give an update and come on here and say that things are really looking up. Oh, yeah. Let's look at my volatility model. I wanted to show this morning was an example kind of how I use it, or kind of how it works. When the market sold off this morning pretty viciously, in fact, we even got under the Bollinger Bands, but my short-term trigger is still well in the green, meaning people are not hedging in the 30-minute time frame. In fact, they're taking off hedges. So anyway, but now at some point, that's also what this tries to show you. At some point, there is a point where the market can go down far enough, it can cause selling to come in and then pick up. What I was trying to say is whenever we have this green small box here, what I call a counter trend rally, that you're generally safe to buy the dip. So this morning's pullback would have been a great place to sell puts or buy calls, for the end of the day or whatever. Now, but however, whenever the metrics change and it goes to red in the shorter time frame, then like it did back here, then you can have, then potentially you could have problems because the longer time frame's bearish and the shorter time frame's bearish. But then when the shorter time frame here, like right here, turns bullish, sometimes you get a counter trend rally. That's what they're saying we're going for right now. Right here, the shorter time frame called for a sell-off that never really did materialize, so that was a bad signal. Right here, the shorter time frame is calling for a rally so far that, other than one gap up, really hasn't materialized. So we'll see what happens. But right now, this is long-term bearish, short-term bullish. All right, guys, thank you for being here. I appreciate each and every one of you. You have a great day.